All right, for this explainer, we're going to put on our detective hats. We're going to take a technical analysis report for one single stock, and we're going to break it down piece by piece, just like we're cracking a really complex case. The goal here? To figure out what the chart is really telling us. You know, beyond all the headlines. Okay, let's dive in.
So, right off the bat, here is our central mystery. Just imagine this. You've got a stock that has posted an absolutely mind-blowing return. We're talking over 2,000%. Then, out of nowhere, it drops over 5% in a single day. The big question, the one every trader is asking, is right here. Is this the beginning of the end? A huge red flag? Or is this just a little dip, a golden opportunity to get in on a rocket ship before it takes off again?
To really get a feel for the stakes here, you have to look at the scene. And wow, this chart really puts that journey into perspective. I mean, just look at that 52-week low, 57 cents, and a high of over $15. Even after that 5% drop we're talking about, the current price is still way, way up there, super close to its peak. So the context here isn't just an uptrend, it's a massive, powerful one. Okay, let's officially open the case file. Our subject is Ondas Holdings. You'll see it under the ticker symbol ONDS. And this stock is clearly at a crossroads, a really critical moment. All the technical clues we're about to look at are pointing to a major decision point. And our job, as detectives, is to put them all together and figure out what they really mean. You know, any good investigation has to start with the backstory. Before we even think about analyzing the recent drama, we need to understand the character of this stock. What's its long-term behavior been like? Is it strong and reliable, or is it kind of erratic and unpredictable? Let's see what the evidence says.
Now, this right here is our first major clue, and it's crystal clear. This table is showing us the stock's average price over different time frames, 50, 100, and 200 days. Well, the current price of over $12 is absolutely crushing all of those averages. I mean, it's not just a little bit higher, it's miles above. This tells us without a shadow of a doubt that the underlying long-term trend has been incredibly strong.
And if you wanted to boil all that long-term strength down to a single number, this would be it. The report gives ONDS an overall technical score of over 83. You can think of this like a grade on a report card. That's a solid B+, maybe even an A- in technical terms. It just confirms what we just saw. This stock's backstory is one of robust health and a really powerful uptrend.
Okay, so we've established the backstory. Now it's time to zoom in. Let's get out the magnifying glass and really analyze the crime scene, that recent sharp 5% drop. We need to look at the forensic details. You know, what exactly happened on that one day.
And this is our first piece of really troubling evidence. See, the stock didn't just fall. It fell on huge volume, almost double what's typical. In the world of technical analysis, that's a classic bearish sign. It tells you there was real conviction, real urgency behind the selling. A lot of people wanted out, and they wanted out now. That's a clue you just can't ignore.
And the bad news doesn't stop there. On top of that high-volume drop, the price also broke right through several key short-term defenses. Think of these moving averages and the pivot point as like lines of support on a battlefield. Well, the price has crashed through all of them. This tells us that in this immediate short-term fight, the sellers have definitely taken control.
And this, right here, brings us to the very heart of our investigation. We have evidence pointing in two completely different directions. We've got a really strong backstory, but a very, very messy crime scene. This is where a technical analyst really earns their pay, by weighing these conflicting clues to solve the puzzle.
This slide just sums up our dilemma perfectly. On one hand, the bullish case, the reason to be optimistic, is all about that powerful, established long-term uptrend. But the bearish case, the reason to be worried, points to that immediate, high-volume breakdown. So which story is the real one? To figure that out, we've got to dig a little deeper and look at some more nuanced indicators.
Okay, so think of this next indicator, the Stochh RSI, like a speedometer for the stock's price. It doesn't just care about which direction the price is going, it cares about how fast it got there. It helps us spot when the selling, or the buying for that matter, has gotten way too aggressive, way too quickly.
And look at this reading 0. A perfect 0. That is a very strong clue for the bulls. It basically means the recent selling was so fast and so furious that the stock is now in what we call a deeply oversold state. It's kind of like a rubber band that's been stretched to its absolute limit, which suggests a snapback rally could be right around the corner.
But hang on, because the plot is about to thicken. Our next piece of evidence is called the Chaikin oscillator. This indicator is like a detective that follows the smart money. It looks at whether a stock is closing the day strong or weak, and then it looks at the volume to see how much money was behind that move. It's trying to sniff out whether the big institutions are quietly buying up shares or if they're dumping them.
And here is the twist in our case. The Chaikin oscillator is deeply negative. It's signaling strong distribution, which is just a fancy technical term for heavy selling pressure. So, at the exact same time the Stochk RSI is screaming that the stock is oversold and ready to bounce, this indicator is telling us there is serious heavy selling happening just under the surface. It's a direct contradiction.
So let's recap. We have a strong long-term trend but a weak short-term picture. We've got an oversold reading but also a sign of heavy distribution. It is time. Let's put all these clues on the table and see what the final verdict from the analyst actually is. And this right here is the crucial point. The analyst's verdict isn't about just picking a side, bull or bear. It's about putting all the clues into context. The verdict acknowledges both realities. It frames the current weakness not as a collapse, but as a pullback, a temporary event that's happening inside that much larger, much more powerful long-term uptrend. It's a nuanced conclusion for a very complex case.
And this lays out the final tally perfectly. The analysts weighed the positives, that strong trend, the high score, the oversold condition, against all the negatives, the high volume drop, the heavy distribution, the broken short-term trends. The verdict basically suggests that, for now, the positives still have the edge, but the risks have clearly gone up. And that brings us to maybe the most important takeaway of all. What happens next? Well, the report identifies this very specific price zone, between $11.10 and $11.44, as the critical battleground. This is the line in the sand. If the stock can hold this level, the bulls can breathe a sigh of relief and say the long-term uptrend is safe. But if it breaks below this zone, well, the case for the bears gets much stronger.
And that leaves us with one final thought to chew on. We've looked at hard data, right? Numbers, charts, indicators, but we've also seen how they can completely contradict each other, requiring interpretation and judgment and weighing the evidence. Which really makes you wonder, when you're trying to crack the case of a stock's next move, are you dealing more with a science? Or is it really, at the end of the day, more of an art?